Hey, what is up, guys? It's Luke. Hope you guys are doing good. Some people in the group chat they wanted me to make an outline of how I took my trade today. So my trade was on my new funded account, on my new 100k account. I took it today using only two contracts, and it was much more higher than, but I just got stopped out in profit. So this here is a bit. How can I say? It's more technical, more requires a bit of advanced theories, but I'm willing to share it. So basically, I'm gonna start with yesterday and then go into today. So always your bias comes from the weekly candle. Your question is, you want to spend most of your time on the weekly thing to see what the price want to do. Okay, so let me just hide the indicators. You want to see what is likely for the weekly candle to do. So now it took its high. We would expect it to it took its objective, so we either consolidate or start to show some placement or like movement down, right? So that was this week's, right? So you see that after taking the high, we had a strong, nice displacement down. So I'm expecting, like, my bias going to the week is like going lower, right? So with that in mind, and up to where would it go? We'll probably come back to here, right? Maybe even the midpoint of this FEG, so somewhere like this. You can see it to the tick. It's not random. And so with that in mind, how you could have traded yesterday the CPI is, let's go back into the 5-minute and hide the indicators, and you can see that it was yesterday here. So start taking notes, guys. From 2 a.m. New York time to 5 a.m. New York time. I think they call it the London kill zone. I don't really prefer to that. That's more Forex stuff, but it still works in stocks, indices. So we would expect the high of the day most of the times, if the narrative is true. So if we're really bearish on the weekly, if our bias is true, then the high of the day will be made in London between these two time frames. Okay, between this from here to here. So you'd want to wait for a change of character from in this area, CHOSH or MSS, short market structure, and then you can basically enter your trade somewhere around here. So you can see Lux Algo BFD, so we had high, lower, low. So this would have been your CHOSH, confirmed CHOSH, high, lower, low. This is also a CHOSH. So what you would be doing is, so we got our structure here. So we would expect to see lower prices, right? So in CPI, we don't know what's going to happen in CPI, but it's still respected this somehow. But we would expect the high of the day to be here. It came back to the FEG, and then it went all the way down. Okay, so basically, yeah, the high of the day is made in London if we're bearish. Now, CPI is an exception actually to the exception I'm going to say in a second, but same thing we do today. Where's today? So in London, if we're still bearish, we'd expect from 2 a.m. to 5 a.m. we would expect again the high of the day to be made. So we wait for a change of character around that area. So did we get any? So we have high, lower, low. We got, this is a confirmed CHOSH, this is also a CHOSH. Yeah, this is also a CHOSH, but it's really a bad one. I would say this is a better CHOSH. And then you can base your entries as high, low. So this like a bearish breaker block. There's another small FPG which is right here. Didn't get the FPG right there. Didn't, but this is also an order block. So you can like try. So if you don't get an entry here, you can go on the lower time, like 4, 3, 2, 1 minute. Try to get an entry there. Or you can just wait for the price to go down. Now this here is actually a better change of character. So if I change the settings in Lux Algo to like, I don't know, maybe like 5, we should probably see this here being the better change of character. I'm not sure what it is. Yeah, see, so here's actually better. Why would we do this? Because this swing low is better than the swing low that we formed here. That was not really a swing low, it's just a small one. This here, price come back here or to here for this line. It's almost the same. This swing here. It's more stronger, so you can see sweep. It's technically the same strategy. Sweep, chosh, FEG, enter the FEG, and then you ride it down. How much more down? This is also new, but you can not project, but you can protrude how far the price is gonna go using. We think we made the high in the day in London, so we can use the standard deviations to see where the price may want to go. So why did I use this from here to here or from here to here? Why did I use that from the high, from this high dimension to this high? They're two different things, right? They're different things. This here is, you can use the manipulated high, high, low, low. So from the high that manipulated this high to the swing low, you can see you've got two to the exact thing, right? Does this occur in an important time? Yes, from 7 a.m. So around from 7 a.m. to 9 a.m. This is your sweet spot where if you're in a short from this London, you want to close your position here because it's going to be time to reverse. So price and time. That's what I mean by price and time. But most of us don't include this in our trade, and you don't have to. It's just too much technicals. But what I tried to do here is let's go back to 3. So high, higher, high. After this point, we form market structure shift as well here, or change of character here as well. You can see it. There's multiple here. Like whatever you want to choose depends on how you look back the period, but they're all valid. So let me go ahead and remove these. So after we broke through, and you don't have to get close below, you don't have to get body close below a swing low to get change of character, right? It's just that's how the indicators do it, and that's a confirmed much higher probability kind of choice, but that's not most people teach you wrong. Even a wick gives you a change of character, but I'm not going to go too much into that. So let's say we got a change of character here from this swing low. We protrude how much further can the price go from here to here. This is time taken into account, which is the London key zone. Also, so time taken into account, and this here we want to see that we presume that this is going to be a resistance kind of area, so we shouldn't close our price, and of course our stop loss would be here. We wouldn't want to see that, like that's why we have a stop loss, because we're not sure if if we're 100% sure it's gonna go down, then we wouldn't use stop loss, right? But that's why we use stop losses. Then you can see that the price comes back 2 to 2.5, sometimes to 3. I think this would be considered 3, or it takes etc. So you want to be taking partials at 1, this swing low, 2, 2.5, close most position here, and most likely it went to 3. So from here to here, I think 3 would be something exactly like this. Just I don't like this. Like, they're all standard deviations anyway, so it came to 3.5. But if you use the way I taught you from here to here, you could have got exactly the 2, right? It's just extra stuff, not necessary, but I'm just showing you what I did today. So back into what I was saying, and here's the exception. So where's 2 a.m.? 2 a.m. is here. Yeah, 5 a.m. We make the high of the day during this period of time, alright? If we're bearish, the narrative is important. If you don't have the narrative, it's just going to be useless, right? And okay, so what would you expect? Because we expect that in nuke open. So from nuke open, we would expect the price to retrace a bit, still not take out London high, and then continue going down, making a new lower low. That's how we do it normally. However, if there's a high impact news driver or medium impact, like I don't know, today we have PPI, this is the only exception where the London high would be invalidated. We would expect the price in New York to make a higher high, higher than London, and then go low and probably make new lower of the day, right? That's the exception. So with that in mind, I want to take a benefit of this going up, right? So what I did is, as soon as I put my breaker block on, so you can see how here Here we have a low, lower low, higher high. This is a breaker block. I extended it, and there's no supply and demand, so it's still usable. I extended it to here, and here we had an FVG. So this is bullish FVG. So this is a unicorn entry as well, right? And then yeah. So also this is what did I say? Yeah, so I entered around just a low, lower, low, high, high as well. So this green candle is also a breaker block. I just reused this one as FVG. Entered just after the market. Then used drop. So at 8:30 it dropped. I just entered on retracement to this unicorn, and then I targeted London high as well as this high, and I had a partial to this one, but I got stopped out in profit after I took the majority of my trade off. So it went up to 2.7k, so I lost about 400. It's fine, it's way more expected, but basically that is exactly how I did it. So yeah, and then at exactly 10 we had this bearish FVG. After we took out the liquidity, we had this bearish FVG, so this would be your silver bullet to go short. And because we are bearish, but we expect New York to make higher high than London because of this exception, which is high impact, medium to high impact use drivers forming this exception to the market. So while I'm here, I wasn't looking to go. I didn't take the trade anyway. But I wasn't looking to get retracing back into here and then take a long at these FVGs for silver. I was looking for price to. I was expecting to go down. I didn't act on it, but it was nice to feel. You see that it did happen, and so yeah, pretty much. So yeah, that was two examples of how to do the trade, and there's multiple ways you can do this. So like while I was taking my trade, I was looking also at the 15 minute, and the 15 minute also had the same exact thing. So I entered around here, the market went higher. It had also the bullish breaker block and FVG, but I was already in here. So that gave me an extra confidence to hold the trade longer, because if it comes back here, it's going to probably bounce, but it didn't, because we know the market is going to probably continue going down. It's just a bit technical. It's just technical, and it's not required to do what I did today. Basically, it's the exact same model. You could have just shorted the London using the sweep, this sweep Chosh FVG. The sweep Chosh FVG around here, and just target this low, previous session low, this low, and if you want to hold the runners, of course, you can just project how much you go down. You can do the 5. This wide in here is just something I'll probably teach you in the future, protrusion or projection. You know, they're the same thing. Alright, so right now the price is, it stayed at equilibrium for the whole day. Right. Also, another confluence I had in my trade was that the market went down in the morning, so it took the liquidities, did a sweep also, everything here. So it ran liquidity. So now what will it do? It will run to inefficiencies and into equilibrium. So from this high, from London high to below, that was literally around the equilibrium, and we had some FVGs here, so it filled the FVGs. So now it's going to run to liquidity. So where's the liquidity? London high, these highs, all of these highs, and of course previously the new game, this high and this high. So I wanted to actually get this London high out, because this was the start of the market maker sell model, this original consolidation. So I was expecting it to take out today. That's why I had more faith in holding the trade, not even closing with, like, letting some of my position continue going on, because I really wanted to take this out. But now it's just, I don't know, it's trying to show that this area here is a very strong area to short, right? I was expecting this to why, but so it's still forming this to fake retails to think this is resistance, so to allow more institutions to start shorting, and then once they think it's enough, big enough position here, they're gonna probably sweep it. I thought today was the day, but nope. So yeah, hope you guys enjoyed this. It was a bit more advanced but I will write those in the secret sources in our channel. So yeah. Peace.